From the trade desk of dailyforex.com, this is Christopher Lewis looking at the dollar Canadian pair for the May 24th Forex session. As you can see, we've had a rather parabolic move over the last couple of weeks, and as a result, we did smash into the 103 level during the Wednesday session. Looking at this chart, you can see I have the 98 level marked and the parity level marked, as well as 101 and 103. And the reasoning for this is I had essentially considered this one consolidation area with a very thick resistance area at the top. In other words, it was a 100 pip thick line essentially. And you can see we did smash out of that. And now that we've broken out of this, we've shot up to 103, which is the next reasonably clean support and resistance line, and during the session formed a shooting star. This is a very bearish signal. However, after this massive breakout, I feel that we need to pull back a little bit and test this as support before we rise again. Because of this, I'm not overly excited about shorting this pair, although I do see a short-term possibility in it if we do break the bottom of the candle for the Wednesday session. A break at the top would smash us through the 103 level, and that would be an extremely aggressive move, which would be very bullish as well. This setup, though, to me, smacks of a pullback and a retest before we go higher. Remember, this is a risk on, risk off pair, and it is influenced highly by the oil markets, and as such, it does make sense that with oil falling, that this, of course, would move inversely as it is a weakening of the Canadian dollar. Looking at the pair, I see that the 101 to parity level should be supportive now, and I am looking for a fall of maybe 100-150 pips, and then I want to see some type of supportive action down there. For those of you that are a little bit more aggressive, though, I mean, certainly you can sell this. That is a trade that I would do in times past. But as I do not choose to spend all day in front of the computer, I don't like to babysit trades that are counter trend like this when I see an obvious setup a couple days later. And that's essentially the lesson in this video, is that there's a very real possibility that there may be something in this trade for both the bears and the bulls. A breaking in the low could reasonably send this down to 101 without really changing the scenario. It would just prove that 103 mattered, and I think that's something that, looking at the charts, especially in the longer term charts, we knew that already anyways. So I'm looking for a pullback and a buy. If we break again the 103 level, break the top of this, it's a very bullish sign, but I would at that point in time be very concerned because we are getting very parabolic as we speak. The 101 level starts the entire support, which used to be resistance zone, down to parity, so I wouldn't hesitate to take a hammer or something, for a long signal at say 1.0050. I wouldn't consider anything broken at that point. And as you look at the charts, you can see that even we pull back to parity, that's still only about half the move, 50%. We're probably closer to 61, and 50 is probably right in the middle here. So looking at that, perfectly reasonable moves, and that's what I expect. Oil is at approaching the $90 mark in the light sweet crude contract, and that is a massive support zone. And oil does look the opposite of this. In other words, it's fallen straight down. So bouncing off that 90 level in oil wouldn't be a surprise either, before maybe another push down.